All right, let's wrap up markets in West Africa, starting with the BRVM 10 index, up about 0.7% yesterday. The composite was up about 0.5% to 194 points, while the currency trading at 505 points. Moving on to Ghana, we saw the market there trading at increasing by 0.1% for the composite index, while the financial stock index was up about also 0.1%, and then the CD trading at 1.98 CD to the US dollar. Moving on to Nigeria, of course, the market has been on the upswing recently, but yesterday was down just a touch to about 35,956 points. The gainers included WAPCO, which is of course a subsidiary of Lafarge, and while others included International Breweries, Okomo Oil, and NASCON. Let's now hear from Babajide Fadahunsi. He's an analyst with Skye Financial Services to give us some thoughts on the market. Babajide, thank you so much for joining us. I think the big question I think a lot of people want to know now is, where is this market headed? I want to get your thoughts on that. We've seen the market up 28% for the year. It seems to be in a good place given where oil prices are, given where the Naira is. Your thoughts about where the market is likely to go from here?
Looking for where the market is coming from in 2008, I think we're still a bit far away. However, it will be interesting to actually justify the fact that valuations are improving across sectors, largely because of improved macroeconomic indices, and we expect this to continue into the year, although there are fears of security risks here and then, likely in the northern part of the country. With the premium of the security risks added to that, we might not see valuation going too far away from where it is today.
Right. So you think at some point investors may begin to pay more attention to the security concerns in the north in particular, because it seems like investors are somewhat immune to that, because over the last few weeks we've seen quite a spate of attacks and the market continues to do pretty well.
Yeah, it's quite interesting because we need to look at the liquidity part of the market. Our market is not that liquid, so exiting might not be that easy also. However, I think they're also waiting for the response of the government, how the government is likely to handle it.
Right.
But largely it is still within the control of the government, and I think that is probably the caution for them and giving them a bit of a better.
Well, you made a good point about liquidity, because I think I was speaking to a trader recently, and he made that point that foreign investors are buying, they're not selling. And of course, what that implies is that we don't have as many securities to trade with in this market, and so the market is pretty much set to continue to go up, but we'll see how that plays out. But your thoughts on asset allocation, given where fixed income yields are? We just had a conversation about fixed income yields. Like I mentioned, over the last 1 month, looking at the bond auction, we saw them tick higher. Your thoughts about allocating between fixed income and equities, given the market conditions right now?
Yeah, I think despite the fears I just identified, I think I'm still quite bullish on the equity market, because there's a lot of value to be gotten from the markets, largely because of the fact that we've seen the financials doing really well, and looking at the fact that PIB is coming up, likely to come up sometime soon, and the manufacturing sector is also growing considering our population. So with that, with those facts, it is necessary that the financial sector is likely going to do well, because they fund those sectors. So in the event when those sectors do well, the financial sector will probably benefit. So I'm quite bullish on financials, despite though they are looking a bit pricey, but I think value can still be gotten in the tier 2 banks and a bit of the tier 1 banks likewise.
So a bit selective amongst the banks. That's your case for equities right now. Okay, but if we move to the fixed income side.
Fixed income market for me is not too attractive now, because the yields are not the premium over the inflation is not so attractive. And considering the standing deposit rate with the CBN at 10%, the upside positions to the fixed income is probably limited, because I think that is the floor. So how low yields will likely go, except something outrageous happens. So for me, I think I'm more bullish in equity, and if you're going to play private fixed income, the short end is a better place to